you're not a graduate, most of the insurance companies don't give you an insurance. If you don't have a salary of more than 5 lakhs, then you cannot get term insurance. If you're from a pin code in Bombay, which is basically outside the limits of what an insurer wants to give you, even in a city like Bombay.
Are you serious?
Yeah, absolutely. With the new regulation, this is also applicable for life insurance. It's very clearly now mentioned that if you delay, you have to pay 5,000 rupees per day after 30 days of basically the time that you get to pay. The coordination between a hospital and an insurer is not that great. It's still a very manual process, right? Half of the people who have, let's say, a child insurance in their family is largely because there was a child that was born and the agent uncle came to know about it and he came to your house and sold it to you.
There are some financial decisions that can have massive repercussions, not just for you, but also for those that you love. And perhaps the most important of those are decisions that relate to your health and life. That's where insurance comes in. Finding the right solution is crucial. But the problem is that both of these industries face major issues. Policies in both of those industries are missold more than any other financial product out there. And that means that even if you buy a policy with the best intention, it may not be the right product for you. But there are changes afoot and things may be set to get better. On this episode of Big Decisions, we'll talk about that first, but we'll also talk about what you need to do to ensure that you have the right kind of protection. Joining me today is Mahavir Chopra, the founder and Chief Executive Officer of Beshak.org. Thank you so much, Mahavir, for taking the time.
Hey, thank you. Thank you for having me here.
So, before we get into this conversation, which I think is a crucial conversation to have,
right.
Especially because there are so many changes that have occurred over the last couple of weeks, I want to learn about what your experience with this industry is, because it goes back decades, right?
Right.
You've seen this industry change completely.
Right.
What have you seen?
Yeah, so there are obviously positives and negatives both. Being in this industry, I've seen so many really large claims and families being supported because of those large claims. That's why the trust on this industry remains, and that's the reason I still continue to be a part of this industry. At the same time, there is obviously a large problem, right? The problem of trust, right? This industry still suffers from trust deficit at the maximum level, right? If you look at all the financial products, like you rightly mentioned when you started off, the most number of complaints that come and the most number of dissatisfaction that arises has been from the insurance domain, right? And that's what basically made us start a platform like Beshak, right? The overall trust deficit lies because this industry largely has focused on sales and distribution and a lot less on other aspects, which are typically the delivery of the product, right? Which is typically claims, right? How do you solve that? How do you basically make that simpler is what should be the focus of the industry going forward.
Okay.
Right? And I am seeing good changes, and I am seeing a lot of things that are moving in that direction. At the same time, being an insider, I'm never happy. So I'm never like satisfied with what is going on. I'm always looking for more because I always try to represent the customer and try to see from a customer's lens in terms of the problems that the customer faces when buying such an important product for their family, like you said.
And that is exactly what I want to establish on this conversation. So let's break it down. First into life insurance and then into health insurance. There are master circulars that the insurance regulator sent out over the last couple of weeks. So for the master circular in life insurance, I think the target was to ensure that mis-selling is reduced and also people are not penalized for maybe buying the wrong product, in which case the surrender value was one of the big talking points.
Absolutely.
Can you explain some of these major decisions and the cliff notes?
Sure. So in the life insurance side and the general insurance side, there are key things that have changed largely on the side of IRDAI's major goal. IRDAI has set a goal that by 2047, they want to see that everybody is insured in the country. Right? That's a goal that they have set. From that perspective, a certain set of things that need to be changed are the things that are being rolled out right now. one of the things is basically making insurance universal, right? So both the guidelines, which is basically for health insurance and general insurance in specific, and typically life insurance, in both these cases, they have basically asked insurers to create products which are available for every kind of customer and not for only the target customer that the insurance company has. So that's one major change, and they have basically said that you don't need to create one product for all, but you need to create multiple products that basically solve for problems for each segment of the industry, and not, let's say, only for metro, and not solving for, let's say, rural, those kind of things.
So I want to step in at each point that you make, because the interpretation of each of these guidelines that the regulator sent out are slightly different, right? While on the face of it, it seems like it's a good decision, it might be headed in the right direction, there is a big but that comes in. It may not actually be practically feasible. On this making it universal, as I understand it, what the insurance regulator has said is that there needs to be a product for everybody, irrespective of age, irrespective of pre-existing conditions, and various other aspects. But the reality is that the insurance company can launch a product, make it available and say, hey, you know what, you can buy this. It's like putting it on the shelf, but it can put it out of reach. Or it can simply say, sorry, we're not selling that right now. Or it can say, I'm not selling it to you. Right? So that's a reality.
That is the sad reality. A lot of the intent that the regulator would have and what it tries to do with regulation may, at the commercial level, when an insurer looks at it, may result in insurers doing workarounds, right? Like you rightly mentioned, there was a time when there was a regulation that was brought in where it was said that term insurance as a product should be available to every kind of user, right? And not only specific to, let's say, a certain segment of the population. But even today, if I basically want to get a term insurance, let's say for the driver who came with me, it's quite difficult. It's actually, in practicality, it's quite difficult on ground.
Why is that?
I think insurers themselves are very constrained to a certain extent when I look at it. So as a company, what we do is we try to look at it from a holistic perspective and not look at it as only from a customer perspective. If you look at it, what's happening is that the insurer today requires support from something which is called a reinsurer.
Right. The guys who are insuring the insurance company.
So specifically for term insurance products, every insurer depends on these reinsurers for basically getting the back-end cover to be able to cover people, right? And there is where they are basically finding it difficult to be able to find that supply from the reinsurer to be able to give into the demand.
Is it because they're not large enough, or is it because there are constraints in terms of the risk involved, where the reinsurer, that is the company that's providing insurance to the insurance company, is saying, hey, I'm not going to touch that because there's too much risk?
Yes.
Or that's the reason?
Absolutely. So the reason is that there isn't enough data. That is what basically reinsurers say, for them to be able to underwrite specific cohorts of customers who basically are not the customers that they have data or they can depend on their basically what they call quality of life, right? So specific PIN codes are not basically given insurance. Specific occupations are not provided insurance. People who do not have educational qualifications, undergraduate, are not provided insurance. So in short, term insurance is a very elite product for a country like India. Right? If you look at the percentage of people, when you cut down all these cuts, like when you put all these cuts into picture, it will not be even 1% of the population of India. So term insurance as a product is available only for 1% is what I look at it when I look at all the specific.
That's quite a statement to make, Mahavir. And look, also interesting because on our platform and practically every other platform out there, people are screaming from the rooftop saying term insurance is what you need to go and buy. So what you're saying is not easy to go and buy it.
Yeah, so if you're not a graduate, most of the insurance companies don't give you an insurance. If you don't have a salary of more than 5 lakhs, then you cannot get term insurance. If you're from a PIN code in Bombay, which is basically outside the limits of what an insurer wants to give you, even in a city like Bombay.
Are you serious?
Yeah, absolutely. Absolutely. That is the truth. Today you can try it out. Meaning on any insurance company's platform, you put. I'll give you the PIN codes if you want, and you can try it out. It will basically ask you you cannot buy this policy basically.
So what's available for you? What can you do?
Yeah. So the unfortunate thing is that when you look at it from a what is available point of view, then it's only the other products, which are the endowment products, which obviously are very inefficient for the family, right? They will give you only 10x of the cover that you basically pay for, whereas term insurance gives you 1000x cover. So that's the huge difference that you're in, right?
So, but let's talk about this, because I always assumed that the reason why the skew was towards these traditional or endowment policies that you're mentioning, and we're talking about 80+% of the industry that, correct me if I'm wrong, that is endowment. I thought that was also because it was pushed by the distribution community.
Yep.
But it's also because term insurance is not available for.
Yeah, so let's say if I have a family who is not falling in the bracket that the insurer wants to cover, and I am still I still want to cover them, or I still want to give them some kind of financial security. I want to suggest a financial security. The only products then would be remaining would be these products. So that is one big support that people who cannot get term insurance can actually get from such products. Although obviously, like I said, they're extremely inefficient from a security protection point of view.
Okay. Yeah. Let's talk about the other major change, which is the surrender value. Is that actually going to work?
Yeah, so it's not changing a lot of things. It's basically, there are two major changes that are being that have been brought in. One is that earlier you were required to pay two annual premiums to be able to basically start or basically apply for surrender. Now that has been brought down to 1 year. So you can now surrender after you've made one annual premium.
And this is only on traditional products?
This is largely on products which have a surrender value. So any product which has a surrender value, in those products basically it will be applicable. So largely yes, traditional products. And the other thing is that they have tried to bring in some amount of reasonability in what the customer will get. It's better than what it was in the past. So typically one thing that has changed is that now insurance companies will, when they are calculating something which is called a special surrender value, there will be a limit on a minimum limit on what they can pay as an insurance company to the customer who's applying for surrendering the policy, which is basically the present value of the paid up benefits of the policy. So basically, if I'm, let's say, covered for 10 years and I have paid for 5 years, then 50% becomes the paid up cover, right? The paid up cover. So basically, the insurance company, the new rule basically says is that you will have to pay a present value of that money to the customer, which is the minimum cap that has been brought into picture, which did not exist earlier.
So I know how the formula works, but it's going to be really hard to describe this on this platform, on this format.
Right.
Basically, I want you to say, does it improve the experience for the customer or does it not?
In my view, when I put it on a spreadsheet, it's not going to be a very big change. It's going to be a minor to a little better change than what it's going to just improve the reasonable amount that a person should get, but it's not going to make a major difference in my view.
So the better thing to do would be to buy the right product.
Exactly, right? Exactly. So the solving for surrender value, in my view, and I have seen some episodes of this show, and there have been other guests who have talked about surrender value should have been much higher.
Yes.
But the point that I actually feel is that it's like solving for what is the fine that I should be paying if I break a signal, right? Should it be 1,000? Should it be 2,000? In my view, right? That's how I look at it. The better solution would be that why does a person basically actually break the signal, right? Why does he do that? In specifics, if you go, the more important solution to the problem is what are the root causes of mis-selling and solving those issues, right? Which is one of the major reasons is the high commissions that
and that's not going away.
Advisors go. No, that is not going away at all.
So the initial thought, and just to complete this part on life insurance, and we'll move very quickly to health insurance. The initial thought that we had was that because of this change in surrender value, this would force the industry to reduce the commissions that are paid to distributors in the first year, because they don't want people to surrender in the first year.
Right.
Does that occur? Will the commissions come down at all?
I don't think so. I really don't think that the commissions are going to come down. There could be a fractional amount of commission which could basically be reduced at the behest of basically saying that, okay, this has happened, so we need to reduce commissions.
Yeah.
But on an overall basis, it does not change anything, according to me, for commissions.
Okay.
Right? If commissions are basically connected to persistency, which is basically how many years a customer
And
pays,
how longer do you stay?
and
How long do you
spread
stay? Yeah.
across the policy term, then it will basically be a very big change, and that actually could solve for the problem. The other obviously is going to be awareness solving for basically making the product so simple for a person to understand, specifically on the liquidity side, like the surrender side, that how you're locked into the product for 5 years or 3 years, and whatever the money that you're going to get if you don't basically continue the policy is something which is also the second thing that would be very, very important.
Mahavir, we've wrapped up more or less the life insurance space.
Right.
And what I got is that nothing is really changing.
Right.
And so we need to focus on the right approach to buying the right protection for you. Has anything changed in the health insurance space?
Yeah, I think health insurance actually is seeing some major changes, and they are really, really good for the customers. One of the most important things that I feel has changed is bringing more accountability, bringing more accountability on the insurer side. Right. So typically earlier, let's say if a customer went to an ombudsman, right, and wanted to basically file a claim, and if it was rewarded in his favor, there was no accountability when the insurer was actually paying the money. Right?
Okay.
And there have been multiple stories where actually the insurer never paid. Right. Even when the ombudsman actually has rewarded it and the case is closed. Right. With the new regulation, this is also applicable for life insurance. It's very clearly now mentioned that if you delay, you have to pay 5,000 rupees per day after 30 days of basically the time that you get to pay. Right. Plus, this is apart from the penal interest that the ombudsman has basically asked you to pay that way.
So I almost forgot myself and whistled on air, but then that is quite significant. 5,000 rupees per day?
Yeah, absolutely.
Okay, but there's more in terms of who can get health insurance. Again, it is along that same line of trying to include as many people as possible. Does that work?
Yeah, so in case of health insurance also, the universal side of the story is still there. The guideline from the IRDAI is that you need to provide insurance for everyone. There is a lot of clause that has come in on the claim side, basically saying that you need to basically settle a cashless claim. So when you get admitted, let's say if it's a cashless claim, and you're getting admitted, it should basically be the process of approval should happen in 1 hour. And when you are discharged, it has to be completed in 3 hours. And the interesting part is that it also says that if you don't complete the process in 3 hours, and whatever time the person is in the hospital after that, the insurance company will have to foot the bill for that specific time period that the person has to stay in the hospital just because the claim did not get
even if it is a copay.
settled. Even if it's a copay, the amount that is basically additionally supposed to be paid by the patient to the hospital, basically because the discharge got delayed, has to now be paid by the insurance company.
And anybody who's had the misfortune of experiencing this, I know that I have.
Right.
It can go anywhere between 5 and 8 hours.
Absolutely, yeah. I've even seen overnight issues where the claim process started, let's say at 4 p.m. and it went till the next day morning. And there are multiple reasons for that, right? Meaning one of it is that basically the coordination between a hospital and an insurer is not that great. It's still a very manual process, right? Which is again where IRDAI has talked about it, saying that they need to bring in, it's a very broad thing that IRDAI has mentioned, but they've talked about basically making claims more, using technology to make claims more seamless and make the processes much more seamless.
When does this come into force?
So currently, what has been mentioned in the circular is that it should be implemented, I think, in 3 months.
1st of October.
1st of October, yeah.
So 1st of October. So what viewers need to know and what people watching this need to know is that on the 1st of October, if unfortunately, for whatever reason, they are admitted and they have to make a claim, they need to remember these thresholds.
Absolutely. In my view, if I'm not wrong, for the cashless thing, they've actually given a lesser timeline. It's almost, if I'm not wrong, on immediate effect is what has been told.
Okay.
But I think for an insurer to be able to roll this out and make it possible, I think it could take another couple of months.
Okay, let's get into what I think is the most important part of this conversation, which is how do you go out and buy a life insurance product?
Right.
and how do you buy health insurance? Both of these are aggressively sold to you, particularly life insurance.
Right.
Should you first of all distinguish between the two? If somebody comes selling you a life insurance product, should you ideally avoid that?
Not really. I would say that you basically need to first understand your own requirements, right? Don't buy insurance in an emotional state, right? Which is something that I see a lot, right? Half of the people who have, let's say, a child insurance in their family is largely because there was a child that was born and the agent uncle came to know about it and he came to your house and sold it to you. Right.
I like how you say agent uncle.
Right, because that's
agent
the truth,
uncle
right?
and agent auntie, right?
Agent uncle, agent auntie. So
right.
yeah, so I'm not trying to like. There is a lot of good work also that agents do, but at the same time, at your end, you need to be very clear about whether this product is really useful for you, and not buy for the wrong reasons. The wrong reasons could be basically that you got emotional, or you're buying it just because there is a tax saving that you're getting without understanding whether that product is actually going to help you in your financial goals. None of the products, in my view, and this is how I look at it, and we look at it at Beshak, is that none of the products that are built and being sold and being bought are bad. It's just that you need to understand whether they are aligned to what you want to achieve.
So, but that's one way of looking at it, Mahavir. But then if you actually compare, and ultimately you have to look at it as what it is. It's black and white. There is no gray in a financial product. It's supposed to do something. It's like a car. It is supposed to get you from point A to point B.
Okay.
But an insurance product that is pitched as an insurance product, but is a combination of insurance plus investment, and the investment is actually getting you what, 4 to 5%, which is subpar if you look at any other product out there, and it is giving you a sliver, a small percentage of a cover which you could buy at a fraction of the cost, then it's not doing its purpose. It's not serving its purpose.
Right. So I have a very different way of looking at this. I'll tell you. So what you're saying is the sales practice. Right. The sales practice of these products is questionable, and there have been a lot of cases where senior citizens have been sold a product which actually should have been sold to a person who is actually someone who's recently married, right?
And that is criminal, in my opinion.
That's absolutely criminal, right? But at the same time, look at it from where we started the conversation, right? Where we said that financial security is a need for a lot of people, and a lot of people cannot get financial security. If I actually draw up a spreadsheet and do a calculation, buying a good endowment product for someone who's not getting term insurance at all can be almost like buying an FD and getting term insurance free, right? For the 10x amount, which is obviously not enough.
It's too less.
But
it's better than they're getting right now.
Better than having zero security. Right. When you're looking at a product, in my view, you should not all mutual funds are good. Not all investment products that insurance companies sell are bad. In my view, insurance companies are this is the reality, that insurance companies are not only, the life insurance side, are not only products which they don't sell only security products, they are into savings products. And there is a long history behind why this happens, because in the country like India, it's also been a behavior that customers do not understand protection so well.
And they don't understand that premium is a cost.
Premium is a cost, absolutely.
Okay.
So when I am sitting in a rural place, right, in a village, right, and I'm trying to sell security, I will have to unfortunately use some savings and build it. I'm not trying to justify.
No, I get that. But having said that, the audience is not that audience, and so therefore let's talk about that audience.
Sure.
And they are justified in saying, hey, you know what, I need the right product for me. Why shouldn't I get term insurance? Why shouldn't I be served it? So what you're saying effectively is that because term insurance is not available, as you mentioned at the start, the best possible option is a substandard product.
Absolutely. So for a person who's watching this show, typically buying a traditional product is something that should be done as a last resort. Right. Usually there would be another product that would be available which would be able to beat that product. So when you are looking at insurance, you are looking at it only from a security and protection point of view. I am looking at it as a category which also sells investment products, right? And what I'm trying to say here is that a customer who's basically being told and sold a product which is not a term insurance has to be extremely careful before they make a decision, right? I would not completely say that these products are not useful at all. Like I can give a very good example of a product that could be really useful for someone who's recently, let's say, become a father or a mother and could need a product like that. At the same time, as a very, very clean, simple thumb rule, it is always recommended that you look at insurance from a protection point of view and don't look at it from an investment point of view, and basically look at all other products that are available from an investment point of view.
So what is a thumb rule to follow if you can set it as that? And let's talk about term first. And if you don't get term, then what should you do? So first term.
So in case of term, the coverage is going to be the most important thing. What is happening today is that people are buying vanity amounts, right? Like they feel that 1 crore is a very good cover. But if you put inflation into practice, and typically people buy term insurance when they are hitting 30, 31, 32. And let's say if you look at an average mortality in India, you are going to basically, let's say if someone is going to survive, let's say 60, 65, 70 minimum, and you look at the present value of that money when you get it, right? It's going to be a very small amount. So in making your term insurance cover inflation proof is one important thing that you should basically figure out. Also, calculating the cover scientifically is something that is very, very important, and not going by just a number saying that, hey, this number looks good.
Shouldn't be arbitrary.
Yeah, so I've seen people who felt that they needed a 1 crore cover, but when we sat down and calculated, it came to like 7.5 crores.
But how do you calculate it?
Yeah, so there is a very simple way to calculate, which is when you can, people who are watching this show can actually Google it and also look at the method. It's called the DIME method. The DIME method basically says that you should basically calculate all the financial responsibilities that you have, current financial responsibilities and future financial responsibilities. That can be divided into two parts again. One is the loans that you have, all the loans that you have. The second is all the financial goals that you need to basically satisfy for your family. Like it could be child education, it could be buying a home or paying a home loan or repaying a home loan. All those things, you put that into one bucket. And then the second bucket is what you already own, right? So typically
all your assets.
All your assets. And you basically do a calculation of A minus B, and whatever is the gap that comes out of that is the cover that you should have.
Okay.
What does this solve for? It basically says that, let's say someone who's bought a policy dies tomorrow. That is the gap that the family is going to suffer from, right? Those are the financial goals that will suffer, and that is the loan that the family will have to pay minus the money that the family already has. What should not be calculated in the assets when you're calculating assets should be things that you're going to consume, like your residential home should not be calculated. Gold should not be calculated.
Okay. Right. Okay. So, and I would assume, of course, you should get as much protection as you can in a traditional product if you're not getting life insurance. That is affordable for you. It should be a balancing act. Let's quickly run through health insurance as well.
Sure.
And this is mired in a lot of problems as well, because a lot of times you don't see all of the fine print that you have to.
Right.
And we were talking before the show where you said that an insurance company, when they sell it to you, appears to be something, and then when they turn around and you bought the policy, it's like they've gone through a bit of a shift in personality.
Absolutely.
So how do you solve for that?
Yeah, so the most important thing is, again, in case of health insurance, is that do not go by a number. Right? Don't go by thumb rules. Actually do basic understanding of what is going to be your requirement. Like for example, when you're looking at a cover, right? What is the coverage that you need, which is basically called the sum insured in technical terms. You should basically not buy a cover for your requirement today, but you should buy it basically for your old age, right? Really, when your hospitalizations are going to kick in and treatments are going to be required. So that is specifically very important. The other thing is what you should not do, right? There are two things that you should definitely not do. You should not go by what your friend bought or what your family bought or someone else bought. Every family has someone who's, let's say, a banker or someone who's, and people just call him and ask that, okay, what is the product that you bought? Just give me the name of the product, right? And I just want to buy. It's not a soap or a shampoo that you're buying, right? So you need to basically do your study. That is one. The other, which is according to me a very, very important thing, and it is the reality of the industry, is that you need to have a good financial agent on your side.
A distributor.
A distributor on your side who has a great track record of managing claims. right? This actually is, and I have gone to the extent of saying this, is that as much time you're going to take to find the right product, you should also take time to find the right advisor, right? Because what's going to happen, when you started the question, you asked that there is a shift, right? When you buy a product, you're talking to the sales guy, and when you're making the claim, you're talking to some other completely different
But why
team.
do you say, Mahavir, that it's important who you buy it from? Does that person help you in the settlement process?
Absolutely. So there are multiple things that play out when a claim happens, right? There are so many regulations which your family or you would not be aware of, which could be your rights, which an advisor, because he is in it every day, would be able to basically defend you from. Also, the fact that talking in the insurer's language and basically understanding the wordings and then bringing it out to the insurer also we've seen makes a difference. Also, when you're buying a policy, let's say directly, and you're talking to the toll-free number, you're talking to someone whose basic job is to solve tickets, right? But when you're talking to an advisor, or basically in insurance terms it's called advisor, but let's say if you're talking to a distributor, what happens is that there is a skin in the game for that person to basically pick that claim and get it basically settled if that person has that mindset. So there are distributors in the market who have only become distributors and have built a practice out of basically solving for claims for customers.
Okay. So we've discussed a number of topics, and I'm sure that we can do another episode simply giving people advice as to how they should and should not buy insurance.
Right.
But then we've completely run out of time on this particular episode. Thank you so much for joining in, Mahavir, today.
Thank you so much,
I'm
Alex.
sure that you have a lot of questions. You still have a lot of questions. Hopefully we've answered a lot of the questions that you did have, but then we will do more shows and more conversations about this very important topic in the weeks ahead. So I encourage you to stay tuned for that. Thanks so much for watching. This is NDTV Profit.